Welcome to Cryptocurrency Explained. In this lesson, I will be discussing how to make a cryptocurrency portfolio. Now, there are many approaches to creating a cryptocurrency investment portfolio. I am going to discuss some different approaches that you can use when forming a portfolio. But please do note that I am not recommending one of these over another or to slavishly follow any of the plans discussed here. I am just presenting these different ideas to create the sparks in your brain to get you thinking about how you want to build your portfolio. The first one, low risk, or the blue chip. Now, blue chip is commonly defined as a reliable investment. This is a term borrowed from the stock world. These are your very well-established cryptocurrencies like Bitcoin, Litecoin, and Ethereum. These are low risk, well, low risk for crypto anyway. A portfolio will concentrate on getting the top coins only, but with low risk also comes low profit potential. Now, some investors are always looking for that 100x return, whereas these coins might only offer a 10 or a 20x return, depending on your time frame. However, they do offer high liquidity and have established brands which can provide a certain level of reliability in a notoriously unstable market. As an example, such a portfolio might be 50% Bitcoin, 20% Litecoin, 20% Ethereum, and 10% Stellar Lumens. Or for an alternative idea, 40% Bitcoin, 40% Litecoin, and 20% Monero. Next, we have the buy the market option. Now, if you believe in the whole crypto market, then you can buy, for example, $100 of each coin in the top 20. This gives you wide exposure across the market and lots of chances to make profits. Now, problematically, you will need a lot of exchange accounts and even more wallets in order to achieve this, which, while being diversified across the markets, means that you have to do a lot of work to set all of these wallets up. Now, some exchanges do actually offer index products whereby with one click you can invest in multiple cryptocurrencies. Abra, for example, offers you the ability to invest in an index of the top 10 cryptocurrencies with one click. As a reminder, of course, you can get $25 in free Bitcoin when you sign up using the link below and after you deposit $5 or more using a US bank account or an eligible American Express card. Another idea which will help keep a bit of sanity as far as having only one or two wallets is concerned versus a multi-wallet heavy option like buying the market is to bet on a chain. Are you a big EOS fan? Or perhaps Neo is your baby? Or Ethereum is the one and only for you? Well, some people just bet on the ecosystem, only buying that cryptocurrency and the dApps that are based on that chain. This certainly makes it easier in terms of wallet management and also helps you keep your focus on the developments of that particular blockchain. For example, maybe we have an Ether-only portfolio, so 50% Ethereum, 10% 0x, 10% Omise Go, 10% Power Ledger, 10% MakerDAO, and 10% Engine. This kind of portfolio will still be nicely rounded out with a nice little base of 20 or 30% of Bitcoin, but focusing on that one blockchain can really make your life much easier, or two blockchains if you decide to diversify into a little bit of Bitcoin. Then, of course, we have the ultra classic portfolio option, which is Bitcoin. Why make your life so complicated? You can always just buy Bitcoin. Keep your life simple. One wallet, one coin to watch. You don't need to worry about this coin or that token. It is the market leader anyway. So having a portfolio of just Bitcoin is a sensible enough approach and one that many people take. Next up, we have one that I am calling the Gambler's Delight. High risk, but also high reward. This portfolio has lots of very low market cap coins which have the potential to go very high, but you are also likely to lose big time. Question is, can you win more than you lose? As a beginner, I would recommend you to not jump right into the low market cap coins. You really need to take your time in order to weigh up the risk to reward ratio and to deeply understand what the project is and what potential it has in the markets and as an idea. This portfolio, of course, should have a nice anchor of Bitcoin once again and can have a mix of medium market caps to super low market cap coins. As an example, 25% Bitcoin, 10% Beam, 10% Origin Trail, 10% Proppy, 10% Sophia X, 10% Navcoin, 10% Nexus, and 15% Power Ledger. This is a relatively high risk portfolio, and I'm not recommending you to go out and buy any of these coins. This is just to give you an example, something for you to conceptualize what such a portfolio may actually look like. While the above ideas will be informative in your journey of building your own cryptocurrency portfolio, the reality for most of us crypto investors is the DYOR special. That is, as you go through your crypto journey, you will learn more and inevitably you will discover new and exciting projects which catch your interest and of course catch your money. And your portfolio will expand to have a mix of these more blue chip style cryptos like Bitcoin, Ethereum, and Stellar Lumens, and your more medium to high risk tokens and coins from across the market and from across many blockchains. Welcome to your new obsession. But regardless of how you style your portfolio, the most important thing is to have a plan. Get a plan and stick to it. Don't hop from coin to coin to coin to coin. You will get wrecked quickly. Every time you enter an investment, you should consider your exit strategy. Even if it is a moonshot, you need to stop and ask yourself what that actually means. And not knowing when to get out is usually the result of not having a plan. You can, of course, have much more modest goals for your cryptocurrencies, maybe 2x or maybe even a very modest 20%. The key is to have a plan and to stick to it and be happy with any profits that you make. Almost no one is ever able to call the exact top or the exact bottom of a market cycle. Also, learn how to protect your liquidity. How much of your investment are you willing to lose before selling? Using a stop loss when trading, or even just having a lower number in mind can be very helpful to protect your liquidity. There is no glory in riding a coin down for a 99% loss when you can step off the train after a 30% loss, for example. And if you are really passionate, buy back in at a lower price later on. Please also understand that you will likely need multiple exchange accounts. This is the reality of crypto right now. Not all coins are available on all exchanges, and you will need many different wallets for those many different exchanges and many different blockchains. Also, a tip is to not diversify too much because you really need to keep up to date with what your project is doing. You can't keep up to date with 50 projects. You need to follow the news updates, you need to know what's going on, and it is super hard to do that if you have so many coins to watch. You will find the number that is right for you, but try not to go too crazy. I know it's tempting. Keep a portion of your portfolio in fiat or perhaps in a stable coin so that you can get onto opportunities when they do arise. So any of these portfolio examples that I gave you could include 10 or 20% of your crypto investment fund as a stable coin like USDC, GUSD, TUSD, or DAI. None of these are hard and fast rules, but provide a guideline for you to help make your own decisions when building your portfolio. Thank you so much for watching this video. Make sure to check out the next video in this series to learn more about cryptocurrencies. And as always, feel free to post any questions that you may have down below in the comment section. Also, there you will find my recommended list of exchanges and wallet options. If you enjoyed this video, leave a thumbs up on it. If you're new around here, make sure you subscribe to the channel to stay up to date with all that is happening in the crypto space. Long live the blockchain, and peace out till next time.